Folks, just like we expected, Bed Bath & Beyond stock is getting completely destroyed right now. It's currently about 11 a.m. on the East Coast, the day after they announced they're filing for Chapter 11 bankruptcy, and the stock is down a whopping 23%, down about 7 cents, right at 22 cents per share. So in this video, you guys guessed it, we're going to break down the charts a little bit, and more importantly, we're going to focus on the Chapter 11 bankruptcy, what's going to happen, my thoughts on everything going on, and of course, what I'm looking to do with my position. So if you guys find value, all I ask is to hit that like button and feel free to subscribe. If you guys want to see more content like this, more updates on Bed Bath & Beyond and other stocks, hit that subscribe button. Let's try and get the 30,000 subs. And with that being said, guys, cheers. Let's dive right into it. So I'm not surprised. You're not surprised that the stock is getting destroyed. I mean, once we got news yesterday, and I covered it in my video yesterday, about Bed Bath & Beyond's bankruptcy, once we got news of that, I told you guys, look, on Monday, the stock is going to get destroyed. I mean, we all knew that. It's not a surprise, right? We ended up closing on Friday at about, 29.5, almost 30 cents. And this thing went down to 14 cents at the start of the pre-market. So essentially, guys, it got cut in half, and now it's been climbing out of that hole a little bit, which is actually a good sign for the bulls. It is up to 22 cents after again hitting 14 cents. So it is up a whopping 65% from that pre-market low. But still, guys, it is down roughly 23% from where it closed on Friday, and it's no guarantee, of course, now that they're filing for Chapter 11 bankruptcy, that this does get back to 30, 35 cents and maybe starts to go green. There's no guarantee of that. There's no guarantee of anything at this point in time, and to be honest, just looking at the technicals, guys, we might fill the gap maybe to 28 cents, maybe we go to 25 cents, and that could be, that could be possible in the short term, but that is a massive resistance. You guys got to realize that we could run to 25, 26, 27, but we then could get rejected hardcore from that point, and we could be going right back to the teens, which we were just in the teens in the pre-market as this thing was at 14, 15, 16, 17 cents, right? So technically, guys, Bed Bath & Beyond obviously is looking like crap. You can see it on the 5-day, 5-minute. We're hitting a fresh low. We hit a fresh low today. That was actually an all-time low at 14 cents. And the fact that we're collapsing under, the mid-high 20s, not a good sign at all. And again, now we're at 22 cents. We might see a little bit of a rally, but I'm not banking on that at this point in time, at least in the very, very short term. So again, we got news yesterday that they're filing for Chapter 11 bankruptcy, which is not a surprise. You all knew this was a possibility. I knew it was. I was saying this in all the videos recently, about Bed Bath & Beyond, that they could go bankrupt. I mean, we talked about it a couple days ago that they were, that they said that they could file over, as soon as over the weekend, which is what ultimately ended up happening. So let me pull up the Safari tab very quickly to show you guys and give you guys a little bit more insight on what could be going on here in the very, very short term with your stock, with the company, Chapter 11, all that good stuff. So Chapter 11's effect on stocks and bonds. You guys see it up here. So sometimes after a reorganization, which is what they're doing right now, obviously in terms of them filing for Chapter 11, a company will issue a new stock that is considered different from the pre-reorganization stock. And if this occurs, investors will need to know whether the company has given its shareholders the opportunity to exchange the old stock for the new stock, because the old stock will usually be considered useless when the new stock is issued. That's something worth mentioning, guys. We don't know exactly what's going to happen with that right now, but you got to realize sometimes when a company files for Chapter 11, they issue a new stock, and the old stock will usually be considered useless. And of course, we'll do a bunch of updates, and we'll track the situation very closely on the channel. So again, make sure to subscribe if you haven't done so already. And throughout the duration of the reorganization, bondholders will stop receiving coupon payments or principal repayments. And of course, the ratings on the bonds, guys, they're going to get destroyed. I mean, they were probably already horrible, junk bonds for sure. But, at this point, furthermore, the company's bonds will also be downgraded, like I just said, to speculative grade bonds, otherwise known as junk bonds. I mean, I'm pretty sure they were already junk bonds for Bed Bath & Beyond. I don't know, but now they definitely are, guys. Now they definitely are. And since most investors, I don't have a lisp, guys, I promise. I don't have a lisp. But since most investors are weary, wow, geez, I can't even talk today, guys, of buying junk bonds, investors that want to sell their bonds will need to do so at a substantial discount, which of course that makes sense. And after the reorganization process, you guys can see right here, and depending on the terms dictated by the debt restructuring plan, the company may require investors to exchange their old bonds for shares or new bonds. These new issues of stocks and bonds represent the company's attempt to create a more manageable level of debt. And if the plan for reorganization fails and the company's liabilities start to exceed its assets, then the bankruptcy is converted into Chapter 7 bankruptcy, which you guys know that is way worse. Under Chapter 11, or rather Chapter 7 bankruptcy, all assets are sold for cash, and that cash is then used to pay off legal and administrative expenses, including during the bankruptcy process. And after that, the cash is distributed first to senior debt holders and then unsecured debt holders, including owners of bonds, and in the extremely rare event that there is still cash left over, which there's probably no shot that there would be if they did go for Chapter 7, the rest is divided among the shareholders. So if you're a shareholder, you own the stock, guys, and they do go Chapter 7, you're probably not getting anything. You're not going to get anything for your shares. That's the reality of the matter. There's kind of a hierarchy here of who gets the money first. Again, it's the senior debt holders, then followed by the unsecured debt holders, then maybe a couple other people, then it's the shareholders of the actual stock. So you got to realize that. You might not get any money back, and that's the risk that we took getting into this particular stock. That's if they go Chapter 7. Right now they're Chapter 11. You got to realize that, but that's if they go Chapter 7. And on the flip side, if the reorganization plan ends up being successful and the company returns to a state of profitability, which would be a freaking miracle at this point, but if that does happen, then multiple things could happen to investors' pre-organization bonds or stock. In the case of bonds, investors may be obligated to exchange their old bonds for a combination of new bonds or stock, depending on the conditions required by the debt restructuring plan. And in addition, the coupon and principal repayments on the new debt instruments would resume. And stockholders, however, you guys can see right here, tend not to be so lucky. Again, stockholders take on a bunch of risk buying stock, especially in a company that is on the verge of bankruptcy. Now they're filing Chapter 11. After restructuring, the company usually issues new stock, making the pre-organization stock worthless. In some cases, holders of the old stock are allowed to exchange their securities for a discounted amount of the new stock, which is dictated by the plan of reorganization, which we don't know exactly how that's going to play out yet. It's too fresh. It's brand new, but we'll see, guys. And I think Hertz is a great example of that. They actually got through bankruptcy. Now they have a new stock. Maybe I'll make a new video on that. That'd be an interesting case study to look at. But overall, that's what happens in a nutshell during Chapter 11, or part of what happens during Chapter 11. And the pros and cons, let me show you guys this, then we'll wrap up the video. Are there advantages to filing Chapter 11? Well, the biggest advantage is that the entity, usually a business, can continue operations while going through the reorganization process. So it's not like they can't sell any of their inventory, or can't do this, can't do that. You can still go to Bed Bath & Beyond, Bbby, or any of the other affiliated stores, and you can still buy inventory. You can still support the business. But I was actually reading earlier today, if you have a 20% off coupon or anything like that, those expire pretty soon. I think as soon as Wednesday, maybe, if I remember correctly. So you can't use that. But of course, guys, I mean, they're going to have mass blowout sales at this point. So what sense would that make for them to take a 20% discount or a coupon if they're already offering their products for like 80% off, 50% off, 70% off, whatever it may be? But overall, it can continue its business operations through the reorganization process, and this allows it to generate cash flow that can aid in the repayment process. And the court also issues an order that can keep creditors at bay, and most creditors are receptive to Chapter 11 as they stand to recoup more, if not all, of their money over the course of the repayment plan than if the company simply went out of business. So guys, you got to realize Bed Bath & Beyond, yes, they're filing for Chapter 11. That's not the best sign, but they can still restructure, reorganize, and come out better on the other side. That's if they end up getting through this, which I was reading a stat, I think only 10% of companies actually get through Chapter 11. We'll see if they make it to the other side. That would be fantastic. Time will tell, guys. Let me know your thoughts down below in the comments. Do you think they will? Do you think they won't? I'd love to know what you guys think. For me, it is up in the air. It's 50-50 at this point. And some disadvantages of filing for Chapter 11. Well, Chapter 11 bankruptcy is the most complex of all bankruptcy types. It is also usually the most expensive. For a company that is struggling to the point where it is considering filing for bankruptcy, the legal costs alone will be insane, and plus the reorganization plan has to be approved by the bankruptcy court and must be manageable enough that the business can reasonably pay off the debt over time. So there's a lot up in the air, guys. There's a lot still going on. There's a lot that we don't know yet, and we just have to let time do its thing. We have to let time do its thing and see how things end up unraveling. So what do you guys think? Let me know your thoughts down below in the comments. Feel free to hit that like button and subscribe if you want to see more content like this, more updates on Bed Bath & Beyond. There's going to be a lot of them, so subscribe. And of course, guys, if you want some free money, get up to 15 stocks from Moomoo using my link down below. Once you open up an account, you get 1 free share of stock. If you deposit at least $100, you get 4 more stocks totaling 5 stocks, and if you deposit at least $1,000, you get another 10 stocks totaling 15 free stocks. And of course, it also helps out the channel. I appreciate you guys as always, so use that Moomoo link down below. Let me know what stocks you end up getting, and don't forget to also check out my Patreon and get 12 stocks from Webull. And with that being said, I'll catch you in the next one. Cheers, guys. Good luck.